Hey everybody, I'm glad you're here with us today, back in the studio. You know how I'm doing a lot of questions and trying to answer a lot of your questions, and I've had a lot about mortgages. So I decided to bring my good friend, Brian McGinley with Sierra Pacific Mortgages, into the studios today.
I own all the ones in Kansas and Missouri.
Yeah, Kansas, Missouri. We've known each other for years. Him and his wife are great people, and if you need to know something about mortgages, they know it about mortgages. So I thought, a lot of our videos are quite short, but this one will be a little longer today, but it's good stuff that you need to hear. And so Brian, one of the things that people ask about is, I hear it all the time about online mortgages, and we always recommend a local lender.
Right.
And I just, for my sake as a professional, it seems like it goes so much easier when we get to closing and stuff if I have a local lender. Have you got top 5 reasons why you would recommend we do that? Or
we fight this all the time. One of the biggest things that we see as a benefit is mortgages are complex unless you do them every day. And as a home buyer, you really have to have somebody there to help you with the process. That face-to-face interaction, I would say, would be the first thing.
Right.
It's the best. You get that relationship built with somebody that you know that you can trust, and that's extremely important.
Right, and one thing home buyers don't understand is when they go into a contract with a seller, their lender is a contractor that they hired to get them through the contract that they have with the seller.
Right.
So you need a true professional on your side that you can go in and talk to.
Right.
Because it's critical for getting that contract with the seller.
Exactly. One of the biggest things that we see, and as a owner of an operation, I'm in the industry in a lot of different arenas, but one of the things I deal with is a lot of the people that staff these call center operations, like your Quickens or these big operations. I mean, these guys have not been in the business very long.
Mm-hmm.
They're being paid a wage that is considerably less than a professional would be paid. They're definitely not as professional, and they're not as invested. Right. So we need people that are local, that are professional, that really understand the market and want to work in the market they're in.
I really like to have my buyers and sellers have somebody that can go in and sit down across from. And, we like to think everything goes perfect, but we have little hitches in the get up.
Yeah.
And if you have somebody that's knowledgeable or has a team behind them that they can call and get an answer to correct the issue, sometimes what seems like an insurmountable hill is a real easy problem to fix if you have a true professional sitting behind the desk on the other side.
Somebody that's invested too. I mean, relationships in our business are everything. My relationship with Sudduth Realty has been extremely important for a lot of years, but there's accountability there. I work to make sure that I am maintaining that professional relationship with you and your team, but I'm also working to make sure that the borrowers get the best representation.
Right.
So the relationship, there's a lot of accountability there, and that's
right.
really important. I feel accountability to you, vice versa, and it's professional to the point where we know we can talk about what we need to and get this thing to the finish line.
Right. And I know a lot of people in our office use your agents, and one of the things that comes up a lot is you get your mortgage and you get going, but maybe 4 or 5 years down the road, you have another solution. You need an answer to another solution with the lending. And if you have a relationship with somebody, you can just call him up and say, "Hey, Brian, we've got somebody, junior's going to college. You got any ideas?"
Yeah, I've been in this industry, in this market for 23 years, and I've done multiple children's loans, and we're actually starting to see even grandchildren's loans come in from some of our older clients. And so it's really, really, it's the foundation of what makes us successful, is that long-lasting relationship where you take care of your business referral partners, but also your customers.
Well, like I tell you, a lot of times, you need an attorney, you need an accountant, you need a realtor that's your realtor, and you also need a mortgage lender that has answers for you through the process of owning real estate. Don't you agree with that?
Absolutely.
Yeah. It's I know I've had relationships with lenders for years, and we talk. I just got an email yesterday about a note that we had, and I sent him an email, and it's done, and I know it's done right.
Yeah,
I have a local lender. Right. Yeah.
The other thing local that's really important, I think, to point out is that your local agents are going to, and mortgage professionals, they're going to understand what's available in your market. You've got bonds, down payment assistance programs, you got tax pay, but there's all kinds of things that locally we would be able to benefit a borrower over something online. And the other thing is that the competitiveness of what you see online is often not the truth. You're going to see something, it's kind of like they're going to put their best foot forward and then come back and deliver something different the farther you get down the process with them. So I don't know if I've given you 5, but there's a whole bunch of reasons.
Well, there's probably a lot more than 5 when you get right down to it.
There's a whole bunch of reasons that the relationship, the accountability, the local knowledge, the commitment to professionalism, all those things really, really add up.
Well, just right off the top of my head, I think about in South Central Kansas, where I work, if you call, rural development loans are real common.
Mm-hmm.
But if you don't understand how they work and where the county seat's at or what areas that they don't cover, you could start into a process with one loan and find out halfway through that it's not going to work. And now you got another appraisal you got to do, which is going to add another $400 to the process and stuff. Where if I walk in and say, I'm going to pick on Mary, but if I walk in and say, she's going to say, well, that mortgage won't work in that area because of that. So
and I think just being able to rely on somebody that you can trust in what they're saying, that's so important. And you really do have a lot of people that are just trying their best to survive in the mortgage industry. But professionals are professionals, and they've been doing it a long time. They're going to be doing it a long time.
Well, I know, and we're kind of talking about this quite a bit, but as dads, we both have daughters. I have 4 and Brian has 2.
Yeah.
Anyway, I know my daughter hired a disc jockey service out of Florida over the internet. And so when it come right up against the wedding date, we didn't have a disc jockey, And I asked her, I said, what are you doing? And she told me, and I said, oh my goodness, I have 4 or 5 right local that we could have known that this wouldn't be a problem. And it all was handled, but once again, she just didn't have the personal contacts that a local guy would have had, and then the disc jockey thing was fixed, and at least she got married and had a great wedding. But anyway, hey, I got another question for you, seeing how you give me plenty on that one. Amortization. A lot of people don't understand amortization, and the word's kind of big. And can you just flip out something there that the local, can understand?
It really is just the schedule that you pay back your loan. And a 30-year amortization means that you're going to make 30 years worth of monthly payments.
Mm-hmm.
The reason that they call it amortization is because it basically explains how the lender, the bank, the mortgage company, the servicer, how they collect their interest. So the front end of a 30-year amortization loan will be heavily weighted with interest, and then farther down you get 28 years, 29 years down the road, you'll be paying all principal.
Okay.
So they do that so the bank can earn their money up front to secure their investment. And it also, obviously, 30 years allows you to minimize the monthly payments. You can borrow much more at a reasonable rate to pay back.
So really, every borrower, when they come in, all they have to do is ask you for an amortization schedule, and then they should get that and put it in their file and have it.
It tells you monthly to the penny what's going to interest and what's going to principal.
Okay.
And then if you get one that's detailed, you can even have your taxes and insurance broken down. Those can change over time. Interest, your monthly mortgage payment cannot change, but your taxes and insurance can.
Right.
But you can look at that. You can pull it out 10 years from now and see really where you're at if you've made that minimum monthly payment. The way to influence that is to pay extra, because every time you make a monthly payment with extra on it, it's automatically applied to principal.
Right. My wife does that.
Yeah,
she's religious about making an extra. So you said 10 years, and that brings up another question. So, like I said, we get a local lender, and 5 years from now, you've had a couple raises, things are looking good, and so a person could call you up and say, hey, Brian, what do you think about changing this to a 15-year AM or a 10-year AM, and you can go over that stuff with them.
There's a lot of, and that's one of the things that relationship that you build with a local professional is going to give you. If you called up an online, or if you applied online, they're going to want to throw you right back into a 30-year loan, which may save you a little bit monthly, but it's going to end up showing you
they're going to make a lot more on
you're
you.
going to never pay the house off. So yeah, every time we look at somebody from our perspective, we want to look at it from just financial advice. What's the best thing that you need to accomplish? If it's monthly savings, you might have to stretch it back out to 30. But there's a likely that with an interest rate reduction and a term reduction, you can show them how much they can save by paying it off considerably earlier.
Which is in a lot of ways, part of financial management and getting ready for the things coming in retirement, or maybe kids going to college and stuff. So
your local professionals too, I'm glad you brought that up. We work with a lot of financial planners just to kind of throw ourselves, just to test what we're doing against what their financial goal is. So if one of the first things I ask somebody that's doing a loan with me is, and my team, I ask them to do this as well, is who's your financial planner? We want to make sure that they bless us too, because you've got goals set with them if they're working with one. If not, we recommend that they do. But if they've got goals set with financial planner, we want to make sure that we're in line with that.
Right.
We're not taking them
to
a 10-year loan and then they can't fund their kids' college fund. Or we're taking them out to 30 and they're not going to be retired at the age that they want to retire. Right. So there's a lot of that. I think that it's just a much more professional relationship.
Right. Well, fantastic. So we talked about amortization. You want to be sure when you get your loan, just ask your lender, your local lender, to print it off for you and put it in a file, and that way you can keep track of it, and it'll recall things that maybe you want to call them back and discuss how you can save a little money. Here's another thing that people get confused about. Even real estate agents, actually, a lot of real estate agents don't understand it. Note rate to APR.
Oh yeah, that is a big one. So note rate to APR, the most simple way to say this is APR, it stands for annual percentage rate. Okay. APR is what you pay in a percentage, and this is the government's, in their infinite wisdom, they said you have to disclose what the percentage rate of the cost of your loan is in the first year. And the reason it's different is because you pay a lot of one-time fees to get your loan up front. There's upfront mortgage insurance that you'll pay sometimes with government loans, and there's also lender fees associated with it. And certain costs, title company and other like appraisal fees and things that you don't pay every year. So the government said, based on that, we want borrowers to understand simple terms what a percentage rate cost of their money would be year one. So it confuses people because you see, a 4.0% interest rate, but a 4.39% APR. The 0.39 is the cost up front.
Okay. Yeah. And he hit on a couple of things that I was going to tell you about, some lender costs and different things. When you get a mortgage, your real estate agent and your lender will itemize all those things out for you. So, and we'll talk about that at another time. I might bring Brian back in to talk about those estimates.
I'd love to. Yeah.
You should never sign a contract unless you know what those costs are and that your interest rates and your payments are what you want them to be. At Sudduth Realty, we wouldn't let you sign one. And so we'll talk about that at a later date. But I had another question, and this is one that causes so much anxiety. Things not to do during the mortgage process. We always talk to people about not buying cars or buying new furniture before you close. We
could tell a lot of stories about deals that have imploded because of that. So
I have one, Brian. When I was a young agent, I'll never forget, we was really tight on an FHA loan, but they're getting the house of their dream. And I dropped my daughters off at school, and I looked over at the rental house where the buyers were at, and there was a brand new red, it was a beautiful red car. And I thought, oh no. So after the girls got out, I pulled over, knocked on the door, and the lady said, that new car was going to look so good in front of our new house. And I was like, no new house.
No good.
But we got it fixed. We had professionals on the job, and we got it fixed. But anyway, back to my question, what not to do?
So one of the biggest, a lot of things actually. I mean, regarding employment, stay put. Don't change anything. Don't take a bunch of PTO. Don't call in sick. Just everything you can do to just stay the course. When we pre-qualify a borrower, which is what is utilized to get them under contract, it's a snapshot of that exact moment in time of how they look. We look at income, we look at credit, we look at all the things that can influence their approval. We need the borrowers to stay exactly like they are. Otherwise, the deal could change. Now, the credit reports that we pull, And the employment verifications that we do, they have expiration dates. They're good for a period of time, but they're not good forever. And the lender always has a right to re-pull credit if something triggers a need to, or they have the right to re-verify.
We do through the process.
Yeah, and they also have a right to re-verify employment. So main thing is no new credit. Obviously, no new credit at all. Do not utilize credit. So if you have a credit card,
don't fill your new house with furniture.
Do not put a big balance on your credit card. Things like that. Try to just stay the course. And then with employment, we do see a lot of changes with employment throughout the process. So we have a situation where somebody just actually decided they were going to go part-time at their job and didn't understand why that would affect their approval. And it was early enough in the process that we were able to stop them from doing it, but ultimately that could potentially kill the deal. So you basically have to recognize that the here and now that we see when you apply is how we need to finalize that transaction. So,
right. Yeah, I've seen that job thing.
Yeah.
I mean, it's critical, and our jobs, let's face it, are fluid regardless of what we do. But that 30 days to get to closing, we got to stay the course.
And credit. And the other thing I will tell you too, it's really smart. If something were to happen, we had a borrower, it was a couple months ago, and he had gotten a collection notice in the mail on a medical bill he didn't know existed. And he immediately brought it to our attention.
Right.
So that was actually really good. We could address that. It was something that was not, wasn't a deal killer or anything like that, but it was something that we needed to address because had it popped up on credit later on, it could have affected his credit score.
Right.
Which would have ultimately, obviously, could have changed the deal. So.
Oh, and another thing is, what we teach at Sudduth University is to not procrastinate.
Right.
We like to have the buyers stay in touch with their lender, their contractor, their lenders, their contractor twice a week. And if the lender asks for something right now is sooner than don't wait a week.
Be proactive, get it in as quick as you can, and full disclosure, if you don't have the money at the bank you need to close and you're saving your paychecks to get it, let them know that. Don't just hide the bank statement from them. We've had borrowers who didn't want to cough up the bank statement because they were afraid they weren't going to get approved. But your lender, especially when you're talking to a mortgage banker, which is what we are, we really succeed just as if a real estate agent. We only make a living if we close loans. You only make a living if you help buyers buy houses. So, we want these things to go through. So we're on your team. That's a big thing that I want people to understand.
Right. Well, and once again, the better job you do, it's all about happy customers and referrals.
Yeah.
And hey, there was one more thing that I was sitting there. Our friends know how I am. Things pop into my mind. But I want you to just really quick, because this is critical, talk to them about the difference between a qualification letter and approval.
Okay.
Because that is, when somebody is negotiating on a home, it can actually save them a lot of money if they have an approval over a qualification.
So a qualification is really simply just a quick verbal look at credit. It's a verbal look at income. The guy says he makes $20 an hour, so we put $20 an hour in the application. We pull credit. Credit looks good at that moment, but he says he has $5,000 in the bank, but yet we haven't verified it yet. So when you're talking about a full approval, those things have been verified, and we actually utilize a new system that I'd love to get out to the public because this is phenomenal. At application, we utilize what's called day one certainty. And day one certainty is basically a way that I can validate through a secure link assets, and I can validate employment and income like that. So I can leave that first phone conversation if the borrowers participate in our day one certainty with a full approval. So when you go write that offer and you get ready to close that loan, when you go write the offer and ready to get a contract, you can actually deliver. It's not contingent. It's not. I have to have this. I have to have that. And the trifecta is if we get lucky enough to get a property inspection waiver, we don't have to have an actual value appraisal done. So we've got some new systems and some technologies in place that the industry is really kind of shifting in our world that will help that. But a pre-approval is really hardly worth the paper it's written on. You got to go farther.
A pre-qualification.
Pre-qualification. I'm sorry.
You want to get pre-approved,
everybody
not
always-
pre-qualified.
Yeah.
So that, and it makes a big deal
Absolutely.
in negotiations. So
Yeah.
get pre-approved over pre-qualification.
Yeah, ask them to take it a step further. Ask them to, provide your pay stubs. Make sure that you provide your bank statements to show what your assets are. Letters of explanation. If your lender asks you to write a letter of explanation for something that happened in your past, get it to them right away. Let that all be kind of vetted and worked through, because it just strengthens your offer.
Right. So, hey, I really appreciate you coming in today. And I bet they have more questions. So you want to be sure and ask them, because we'll bring Brian back in and get them figured out. So I really appreciate it. If you need something, tell them how to get a hold of you, by the way.
Well, we're local here in Wichita, so you can call us at our number 316-260-5656. Or you can go online at spmc.com/Wichita. Yeah.
Fantastic.
Thank you.
Thanks for watching us today. I love you all. We'll see you next time. Have a blessed weekend.
Appreciate it.